Hello everyone, this is Dr. Mihir Shah once again with another video. In this video, we are going to solve November 2023 university question paper under the subject Financial Accounting. Again, a very important video for all the TYBMS Sem V student. This is the first part of the video series whereby we are solving November 2023 university question paper. Okay, so let us see what are the various sums that we are going to take up in this particular video from the paper and how to solve them in the most simplest manner. Okay, we'll read the very first question. From the following particulars of Urvashi Limited, prepare profit and loss statement for 31st March 2022 as per the revised schedule. After that, they are giving you opening stock of finished good, closing stock of finished good, cost of material consumed, sales, interest received, depreciation, general expenses, salary and wages, interest on debenture, provision for tax and transfer to general reserve. Okay, so these are the things given and they are asking us to prepare profit and loss statement. So now I've already made the statement and I've kept. Okay, if you look carefully, it's given in the books of Urvashi Limited. We have profit and loss statement for the year ending 31st March 2022. Particulars, notes, amount. Under particular number 1, we always have revenue from operations. Second, other income. When you add up both, we get total revenue. Next, we have expenses. Under that, cost of material consumed. Second, change in inventory. Third, employee benefit expenses. Fourth, finance cost. Fifth, fifth is depreciation, and last 6 is other expense. We add up all the expense and we get total expense. Next is profit before tax, that is revenue minus total expense, less provision for tax will give you profit and loss for the period. Okay, so this is how you all had, this is the basic format of your P&L statement. First you need to note down the statement, and now we will start one by one noting down what all things have been provided in the question and how and where to place them. Okay, anything which has more than one entry, okay, any heading which has more than one entry, will prepare a note for that. Okay, chalo, we'll start one by one. First, as per our format, revenue from operation. The biggest revenue from operating business for a company is always the sales. So let us see if there is sales. Okay, in the question, if you can see carefully, they are giving you sales 5 lakhs. Okay, and there is no sale written or any other thing given based on that. So we can directly write that value 5 lakhs as revenue from operation. Okay, that's the very first thing. Next, other income. So now let us check what all other income we can put. So we have, see, if you can see, we have interest received. That is one income which I can see. Other than that, salary, interest on debenture. Interest on debenture is an expenditure, okay, so it's not an income. So there's only one income which has been received, so that's interest received. I can directly write, we don't need to prepare the note because there's only one single entry. So other income mein, we have only one value which is interest received, which is 25,000. Okay, so if you just want to show that, so here on in bracket you can write this is sales and this was interest received. Okay, next, so when we add up, we'll get the total revenue. So 5 lakh plus 25,000 is 5 lakh 25,000. That's our total revenue. Okay, now under expenses, very first thing is cost of material consumed. So let us check anything which is related to cost of material consumed, matlab anything which you have purchased, any material you have purchased. So let us see what all things have been given you. So they are given the question, cost of material consumed 1,75,000. So we take it as it 1,75,000. Change in inventory. This is very important. The change in inventory is nothing but the opening stock minus the closing stock. In the question, opening stock is 1,50,000. So here we can show that here only. Okay, it's 1,50,000. That's opening stock. Minus closing, which is 30,000. So opening minus closing, we get the value as 1,20,000. Okay. Next, employee benefit expenses. Anything which is for the employees. Any expense that we have created for employees. So if you can see in the question, there's something called as salary and wages. So anything which is for the benefit of the employees, all that comes here. So there's only one here, salary and wages. amount is 50,000. So we note that down. Finance cost is all your interest related costs. So interest on debenture is available, which is 5,000. Okay, again I'm showing here. Here we have noted interest on debenture. This was wages and salary. Okay, next depreciation they are giving you. If there is there is depreciation of again 5,000 directly. It is given in the question. We note that down. Now other expenses, let us see the opening stock of finished goods we have taken, closing has been considered, cost of material, sale, interest received, depreciation, general expense not yet taken, salary taken, interest taken, provision for tax and transfer not taken. So general expense is the only thing which is pending, amount to 10,000. Okay, so that's it, no other expenses are available. So we add up 1,75,000 plus 1,20,000 plus 50 plus 5 plus 5 plus 10, which comes to 3,65,000. Okay, so total revenue was 5,25,000 minus 3,65,000. We will get our profit before tax as, when you subtract, we get it as 1,60,000. Okay, less provision for tax, they are given in the question 50,000 rupees. We will subtract it and we will get our final profit and loss for the year, which comes to 1,10,000. Okay, and now last thing, transfer to general reserve. The transfer to GR comes under balance sheet, so it will not appear in the profit and loss statement. Okay, so this is it. These are the only thing which you are supposed to be noted down, and this is how you'll have to prepare profit and loss statement as per the revised schedule. So you just have to note down, learn the format and just post those values which they are given. Okay, chalo, I hope everyone have understood it. You all can go through it once. Okay, now let us check the next sum. Okay, now we'll read the next question. It's given that Tejpal Limited exported goods to Happy Limited from USA worth $50,000 on 15th Feb 2021 when exchange rate was 65 rupees per USD. The payment was received in installment as under. On 10th 1, that is 10th Jan, 10,000 was received in advance, because see, we are selling it on 15th Feb, but we got an advance on 10th Jan itself when the rate was 66. Then 15th March mein $20,000, 10th April, that is the next year, $15,000, and then 10th May again $5,000. Okay, and then thereafter they are giving you Tejpal Limited closes books every year on 31st March. On 31st March 21, the exchange rate was 68, and you are required to pass journal entry in the books of Tejpal Limited for the year ending 31st March 21 and 31st March 2022. So 2 years they've asked you to prepare journal entry. Also prepare FEF account, that is foreign exchange fluctuating account, in the books of Tejpal Limited. Okay, now before starting with the journal entry, we will first do some working, and based on that working, then thereafter we can pass the journal entries. Okay, so first for the working, okay, I've taken an additional sheet. We'll just note down in brief what I was given here. So now we are Tejpal and we are exporting, meaning we are going to sell here. We are selling $50,000 ka goods on 15th Feb when the rate was 65. So when we multiplied 50,000 into 65, we got 32,50,000. Okay, now this amount, this 50,000 was paid in 3 installments. First it was paid on 1st Jan. Okay, that is advance, it was paid $10,000 when the rate was 66. So the amount comes to 66 lakhs. Now remember, we sold it for 65, but we received in advance 66. So there's a gain. Okay, gain of basically, whenever this will be realized, there will be a gain in this. Next, on 15th March, there is $20,000 at the rate of 67. So 20,000 into 67. It comes to 13,40,000. Okay. Again, we sold for 65, but we will receive 67, and again there will be a gain. Again, realizing part we'll see later on. Now the next two entry was of the next year, 10th April, which was $15,000 into 66. So let us see how much that comes to. We multiply that, 15,000 into 66, which comes to 9,90,000. But remember, this is next year, so I'll just make a dotted line because that is the second part. And then last installment is in 10th May, $5,000 when the rate was 64. So 5,000 into 64, which comes to 3,20,000. Okay? These are the four values that we have got. Now, so first thing first, date wise we are going to solve. The very first date will come as 1st October. Okay, 10th October. No, sorry, it is 10th Jan. Sorry. It is 10th Jan. Okay. So on 10th Jan, we are going to first receive an advance. Now remember, we are exporters. So exporter ka logic is first we are going to sell. Okay, and then we are going to receive the money. So, okay, so whenever you receive the money, the entry will always be bank account debit to the party. And if there is a gain or a loss, according to that, we will have to do the adjustment. Okay, chalo. So we'll start in the books of Tejpal. We are starting with journal entry. Right here in the books of Tejpal. So in the books of Tejpal, journal entry. Columns are date, particulars. Okay, we have LF, debit amount and credit amount. The first date was on 10 Jan. So 10 Jan 21. We are receiving an advance payment. See, goods have still not been sold. So we are just going to receive the money. Entry will be money coming in. Bank account debit to who's the party to whom we are going to sell. We are going to sell it to Happy Limited. So to Happy Limited. Amount, we have already got 10,000 into 66, that is 66 lakhs. So advance, whenever you receive, you just have to pass a normal entry, money coming in. Okay, adjustment, the narration being advance received. Okay, our first journal entry has been passed. Now next, after first the 10 Jan, now we are coming to 15th Feb, where we are actually selling the goods. So I'm writing here 15th Feb 21. Now you're selling the goods. Whenever you're selling, the rule is debit the receiver. So here Happy Limited is the receiver. So Happy Limited account debit. Now remember, we are selling it. So the goods are going out. Okay, so Happy Limited account debit to export sales. we are selling goods of 50,000 at the rate of 65, okay, which comes to 32 lakh 50,000. So I'm writing here to export sale 32 lakhs 50,000. But now remember here, whenever there is an advance payment received or paid, okay, when we receive for 66 rupees, but currently the rate is 65. So we have a gain. We have gained 1 rupee here, okay, on $10,000 pay. So 10,000 into 1. So remember, gain may FEF is always credited, loss made is always debited. So here it will be to FEF account. So what was the value for this one? It was very simple. It was $10,000 into 1 rupee ka gain, because there's a difference of 1 rupee. So 10,000 was the gain because of that advance payment. So now we add up this, so 32 lakh 50,000 plus 10,000. So that will become 32 lakh 60,000. So I'll write here, being goods exported. Okay, chalo. So we are done with the export, we are done with the advance. Now we come to the next entry on 15th March, when you're going to receive the second installment. So 15th March 21, you're receiving the installment, okay, for $20,000 at the rate of 67, hence making a gain of 2 rupees. 65 was the original price, 67 is the receiving, 2 rupees extra, 2 into 20,000. So 40,000 ka, there's going to be a gain in this, okay? There's going to be a gain of 40,000. So we are passing the entry again. Debit what comes in, money is coming in. Bank account debit to who is giving you the money? Happy Limited. So party account credit to FEF, because there's a gain in this. Okay. FEF, so see how much money are we receiving first. First of all, you have to see how much you are receiving. You are going to receive 13 lakh 40,000. So 13 lakh 40,000 is the money that you are going to receive. Okay, 40,000 ka there is a gain. So under gain I am writing 40,000. So the difference is 13 lakhs, that comes in Happy Limited. Being amount received. Okay, that is how you'll have to pass the first 3 entries. So we are done with this part also. Okay, now the most important. On 31st, this gap is for 31st March. On 31st March, the question says, he closes the book every year on 31st March, and on 31st March 21, the exchange rate was 68 rupees. The exchange rate was 68. So now when we are closing the year, okay, whenever we are coming to the closing of the year, we have to pass the if entry. If meaning, what if the remaining 2 amount which you are supposed to receive in the next year, if that would have received in this current year, then whether I would have been in a gain or a loss, only that we need to find. How much is pending? 15 and 5, 20,000 is pending. Okay, that is outstanding. 20,000 is pending. Now original price was 65. If I had to receive that same $20,000 in this current year and on 31st March, there would have been a gain of 3, because 65 I would have received 68. So into 3, 60,000 ka I would have had a gain if I would have received the balance in the current year itself on 31st March. Okay, so we need to pass this gain ka particular entry. So gain mein hamesha remember FEF is always credited. So on 31st March, Happy Limited account debit to FEF. FEF is credited 60,000 on both the side, being balance adjusted. Okay, so balance adjusted is 60,000. So now last entry we have to pass for this current year, where we have to transfer all our losses and gain. So on 31st March 21, now let us check. where we have what things we have. See, we have 10,000 ka gain, we have another 40,000 ka gain, and we have another 60,000 ka gain. So basically 1,10,000 ka gain we have. See, whenever there is a gain, FEF is credited. So whenever we're going to transfer the gain, it will be debited. So my entry will be FEF account debit to profit and loss account, to PNL account, 1,10,000. 1,10,000 being balance transferred. Okay, so with this 1 year ka entries are done. The first year is over. Now we jump to the second year. Now come back to the working. Now remember, second year, whenever you're now going to the second year, the original rate which was 65, that you can't consider. Now you'll have to take all, compare it with the 31st March rate, which is on 68 ka rate pe. Okay, now so on 10th April, now look at this very carefully. On 10th April, we are receiving at the rate of 66, but the 31st March ka rate was 68. Matlab basically now we have to sell, consider ourselves as, what if we have sold it for 68 and now we are receiving only 66, so there's a loss. So my entry for 10th April 21, my entry would be, again, first of all I'm receiving, so it will be bank account debit, 15,000 into 66, which comes to 9,90,000. So I'm receiving 9,90,000. Again, 15,000 into loss. How much is the loss? So 66 and 68, 2 rupees ka loss is there. So 30,000 ka loss. Loss is always debited. FEF account debit 30,000. To Happy Limited, the total of which comes to 10,20,000. Okay, already being amount received again. There's one more amount which you are going to receive. So on 10th May 21, you're again receiving 64k rate pay, but the balance rate was 68. So there's again a loss of 4 rupees. So my entry will be again similar. Bank account debit, FEF account debit to Happy Limited. Bank account is 5,000 into 64, which is 3,20,000. FEF may again 5,000, so it's again going to be a loss. Okay, 5,000 into 4 rupees. 5,000 into 4, so that comes to 20,000. So 3,20,000 plus 20 is 3,40,000. Being amount received. Last entry. So this year is over. That's it. That's no more. One last entry you have to do. That is the transfer entry. Okay. I'll remove the working sheet now. Now transfer entry is very simple. There was a loss of 30,000 and then there was a loss of 20,000. So total 50,000 ka there is a loss. Loss may FEF is always debited. So transfer may it will become credit. On 31st March 2022. Okay. It will be PNL account debit to FEF. Amount is 50,000 on both the sides. Okay. Narration में being loss transferred. Okay, so this is how you all had to solve the problem sum question number 2. So in this, so we have solved both the sums under question number 2. One was based on final accounts and the second one was based on FEF. Okay, now this sum ka one last part is still pending. Okay, we are done with the journal entry. Now let us see how we have to create the ledger account of FEF account. Okay, so I'll just create the table and then we'll start with the video. Okay, now I have made the FEF account. Now this is very simple. We only have to look at all those places where FEF is written and we have to just pass the opposite entry for the same. Okay, so we'll see. First FEF is written here on 15th Feb. It is 2 FEF. So when you hide FEF, the reverse entry will come. So if it is 2 FEF, so it will be buy happy the date 15 Feb 21 by Happy Limited. Only take the FEF amount, which is 10,000. Next, again 2 FEF, so it will be by bank now in this case. Okay, by bank 15th March, by bank 40,000. Again I can see 2 FEF, so it will be by Happy 31st March 21, by Happy. So this is just a copy paste entries, okay? And on 31st March it is FEF 2 PNL, so 31st March 21 2 PNL 1,10,000. It will tally itself, okay? So 1,10,000 on both the sides. The year gets over. Same way we do for the second year now. In second year we can see FEF year 2 Happy, so we'll take it as 2 Happy. So that will be 10th April 21 to Happy Limited, amount 30,000. Again FEF 2 Happy, that is on 10th May 21 to Happy Limited. Okay, and this is PNL to FEF, so it will be by PNL. So on 31st March 22 by PNL 50,000. So this is just a copy paste entry, you just have to take copy and paste it. So 50,000 on both the side. Okay, so this is how you all had to solve this particular sum, where we had to pass the journal entry and thereafter prepare the FEF account. Okay, chalo, I hope everyone have understood this. Okay, chalo, with that we will be ending this video here. Thank you.